So if we are sending the goods to related person, then that transaction will not be considered as a value of supply. Directly or indirectly owns, controls or holds more than 25% of the shares. So while purchasing, we already paid some tax. So this is the tax what we have paid. It is 12,52,000. On this we can calculate the GST 18% if you want. Hello my dear students, I am Rajesh sir, faculty, Department of Commerce and Management, Vidhyaashram First Aid College, MYSURU, Temple of Excellence. My dear students, in today's session I am going to handle the subject Indirect Tax 2 for 6M BCom, and the topic is revision on valuation of taxable supply and registration under GST. Now let's go to the first slide. So introduction on value of taxable supply. So what do you mean by value of supply? In order to calculate the tax or impose the tax, we have to understand what is the exact value of the supply. So we have to understand, though the actual cost of the product will includes other expenses also. It may be loading, unloading, transportation expenses, other commission paid, and any testing and verification charges paid by the, it may be paid by the supplier or paid by the recipient of the goods. So we have to calculate what are the items we have to included in the value of supply, what are the items we have to exclude from the value of supply. These things we need calculation of value of supply. So GST is levied at a specific percentage of value of supply of goods or services or both. So we have to levy the GST or tax on the actual or some specific goods or value of the supply of goods or services. It becomes necessary to compute the value on which tax is to be paid. So we have to calculate the actual price of the supply including all the expenses in order to levy the tax. Next point, to determination of the value of supply of goods or service or both shall be made in accordance with the provisions under section 15 of the CGST and SGST Act. So under the CGST and SGST Act, there are some provision to calculate the value of supply. So to compute the value of supply, so by using those provision, so we have to include some expenses or any other items, and we have to exclude some items. So those things under the provisions of under section 15 of the CGST and SGST rules, we can calculate the value of supply. Next point, the value of supply of goods or services or both shall be the transaction value. So we have to calculate the transaction value. Whatever the actual price of the goods plus other expenses will be called as transaction value. The transaction value is the price actually paid or payable by the supplier of goods or services or both, where the supplier and the recipient are not related and the price is the sole consideration. So who is a related person? So if we are sending the goods to our own employee or our own employer, or it may be partners. So if we are sending goods to related person, person means it may be individual or business or any entity. So if we are sending goods to our own person, who is person? Our own person means it may be our employee, our partner, so it should not be related to in any other form. So it should be unrelated person. It should be unrelated person, then only we will consider. So whatever the goods we send to that person, if he is related person, then we will not consider it as a supply. If he is a unrelated person, then only we will call it as a supply. Who is related person? So related person means he may be related to business directly or indirectly. He should not be related to business. So related person means he is a person who is directly or indirectly who can control the business or handles or works under the same business. For example, employees, it may be partners, it may be person who is indirectly can control the business or directly can control the business, having a shares in business. So if this person, for this person, if we send the goods, supply the goods, then that supply cannot be considered as value of supply. So apart from this person, so if we are sending the goods to unrelated person, then that goods will be considered as a value of supply. Next point, consideration for accepting transaction valuation under section 15. So as per section 15 of the following condition shall be fulfilled for accepting transaction value of supplier goods or service or both. So the price actually paid or payable is in the future date. It may be actually paid or it may be payable in the future. On credit transaction we are sending the goods, that also will be considered as the value of supply. Next one, the supplier and the recipient of the supply should not be related person. Already explained you, a supplier means the person who is sending the goods, a recipient means the person who is receiving the goods. They should not be related person, they should be unrelated person. Person means business, person means it may be individual or organization. So if we are sending goods to our own agency, our own branch, to our own employees, our own partner, or the person who is directly or indirectly controlling our business. So if we are sending the goods to that person, then it is called as related person. So if we are sending the goods to related person, then that transaction will not be considered as a value of supply. Okay, if we are sending goods to other persons like customers, any other business entity we are sending who is not related to directly or indirectly related to business, then it is called as value of supply. We will consider that amount as the transaction as a value of supply. Next one, the price is the sole consideration. The actual price of the product will be the actual sole consideration for the valuation of the goods as a supply. Next one, for the purpose of section 15 of the CGST Act, person, both supplier and recipient shall be deemed to related person if they are. So if they satisfy this condition, these following condition, then that person will be considered as a related person, and we will not consider whatever the supply we do or we transfer or supply those products or service to that particular person will be considered as not as a supply. Next one, so officers or director of one another. So if he is a officer of our own business or a director of our own business, if we are sending goods to that particular person, then it is not called as supply. It does not belongs to the value of supply. Legally recognized partner, if we are sending goods to our own partner, then also it will be not considered as a supply. Next one, employer and employee, if he is an employer of our own business or employee of our own business, then also it will be considered as related person. Next point, directly or indirectly owns, controls or holds more than 25% of the shares or the more than 25% of the voting rights of the business, then also will not consider that person as a related person. Next point, directly or indirectly controls each other. So if he controls the business directly or indirectly, then also if we are sending goods to that person, then that particular transaction will not be considered for value of supply. Directly or indirectly controls by third person, if he is influencing by indirectly from through third person, so then also will not consider for a value of supply. Next one, together directly or indirectly controls a third person. Next one, member of the same person. Some same person means business. It may be business or individual institution, any person. If he is our own business member, if we are sending goods, supplying the or transacting some goods, then also will be considered as a related person only. That transaction cannot be calculated or taken for a value of supply. Next point, inclusion in the value of supply. Section 15 subsection 2 says any taxes paid. Next one, obligation of the supplier paid by the recipient. If any obligation, any taxes, any expenses paid by the recipient of the product instead of supplier, then also will consider for the valuation of supply. Next one, incidental expenses. What do you mean incidental expenses? Loading and unloading charges, any verification charges, any testing charges, and traveling expenses and other transportation expenses like that. Next one, charges for delayed payment, late fees, any other charges including the value of supply, that item you have to take. A next one, subsidies. So subsidies not from the government other than the government subsidy we should consider. Next point, now this is the calculation or we have to, this is the format for the calculation of value of supply or computation of value of supply. So let's take the selling price, ex-showroom price excluding the GST we should consider. So this is the actual amount. Next one, we have to add the following items. What are those? First one, inspection charges. These are the incidental expenses. Incidental expenses, advertising and publicity, packing charges, discount and advance payment, materials purchased excluding GST. If it is including GST, we should make exclude of GST. Next one, design and development charges, subsidy other than government subsidy. So if the central government or say state government giving any subsidy, we should not consider for valuation of supply. Apart from any other subsidy given by the head office, given by any other branch office, that one we can calculate. Next one, any bonus paid, commission paid, incentives paid to our salesman. Next one, royalty and license fees paid to landlord or any other owner. Next one, service and selling expenses, freight and transportation expenses. Next point, installation and erection charges if shown in the invoice price. So if the installation and erection charges added in the invoice or billing, then we should take that amount. Next one, insurance up to the place of delivery. Next one, tax except GST, any GST, CG, ST, SG, ST, so any, and IG, ST, UT, GST. So if we paid any types of GST, we should not take for the calculation of value of supply. Next one, import inclusive of BCD, basic custom duty, and excluding IGST. So if the import, we should take in that particular import or the cost of the product plus BCD, basic custom duty, we can consider. So if it is including IGST, we should remove the IGST. We should take only the actual worth of the product plus BCD, basic custom duty. Next one, loading and handling charges and warranty expenses. Now add all the expenses. You add, show here. So this amount, value of the actual price of the product plus all the incidental expenses. So you'll get the some amount. This is called as transaction value. Transaction value, or it is also called as taxable value of supply. Now let's go to the problem. Mr. A sold a product intra-state. Intra-state means what? Within the state. So within the state means, so any GST has to be calculated, CGST and SGST. If it is intra-state, intra-state means within the state. So within the state means any after calculation of the value of supply, after once we got the total value of supply, we should make or we should calculate the tax. Any tax, after calculation of tax, we should divide the tax as CGST 50%, CGST 50%, SGST. Now, input of materials purchased 50,000 and IGST paid 9,000. Next one, components purchased from a supplier for 15,000 and the GST paid 5,400. Subsidy received from the central government, we should not take this. Next point, labor cost, we can add this. Next one, administrative overheads, we can add. Profit charge 20% on the cost of the production. Next one, discount allowed to customers as per the terms. Next point, expenses on package incurred by the supplier, we can add this. Transportation charges paid by the customers, we can add this. So now calculation of supply, actual value of supply. So cost of the input is 50,000 rupees. Add cost of components. So here it is cost of components. So if we have paid any GST here, we should not take the GST. Any GST should not be applicable while calculating the value of supply. Next one, components purchased, we can add this. GST paid, don't take the GST. So what is the components? 15,000. Next one, cost of labor, we can take cost of labor here. So cost of labor we can consider. So subsidy given by the government we should not consider. Next one, administration overheads. So we can consider the administration overheads. Next point, add profit 10%. So on this, now add this. So we'll get the cost of production. On cost of production, we should calculate the 10%. This is 10%, not 20%. Make this 10% profit. So the profit is 10%. That means 90,000. 90,000 into 10%. It is 9,000. Add the profit. So it will become 99,000 price of the product. Next one, packing charges. Add the packing charges 4,000. Cost of transportation 7,000. So it will become total value of the supply is 1,10,000. So total value of the supply is 1,10,000. Again, deduct the discount if they given the in percentage. If the discount is given in the percentage, so take the percentage on the actual value of the product. If they give the discount on 10% on the actual cost of the product, we should calculate the discount. Don't take this amount while calculating the discount. We should take the 50,000 rupees or actual cost of the product, we should calculate on the discount. Next point, so he has already directly given the amount. What is the discount? Discount is 5,000. Directly deduct the discount 5,000. Now we will get the actual value of the product. Next one, IGST paid on supply should not be considered while calculation of supply. Next one. Now let's do one more problem. So compute the value of supply of goods and GST payable from the following information. First one, selling price of the supply excluding GST. When they give excluding GST, we should take all the items. If they give including GST or including following items, we should not consider the following other expenses, incidental expenses. Keep this in mind. If it is excluding GST, add all the items given here. Okay. If it is inclusive of GST, don't take following items because it is already included in the value of supply. So if it is exclusive, we should take, or excluding following expenses, we should take it. If it is including following expenses, we should not take for all the incidental expenses. We should directly calculate the tax. Now, so what is the actual cost of the product is 6 lakh rupees. Add advertising expenses, publicity expenses added, selling and distribution added, loading and unloading added, service charges we can add, outward freight and insurance we can add. Next one, expenses of B to G above are separately shown in the invoice. We can add this. Next one, discount, calculate discount 10% on goods. Next one, electronic rate ledger shows the following balances 12,960 and 14,340. What do you mean electronic rate ledger? So this is input tax credit available. This is input tax credit available. What do you mean by that? See, while to produce any products, we have already used some raw materials. Okay. So we have purchased the raw materials, we have purchased the capital goods or machinery, plant and machinery to produce the goods. So while purchasing, we already paid some tax. So this is the tax what we have paid while purchasing the raw materials and inputs. Inputs means, so we have purchased the raw materials to produce the product, is called as input. What is output? Finished goods or of produced goods is called as outward or output. Output means produced or finished products. Input means raw materials. So in raw materials, we have purchased the raw materials and we have paid the tax to the extent of CGST we have paid 12,960, SGST we have paid 14,340. After calculating the output value of the actual supply, we have to calculate the tax at 18%. 18% means 9% CGST, 9% SGST out of 18,000. So 9% is CGST, 9% is SGST. So we will get some amount. Out of that amount, we should calculate the already tax paid. This is the tax already paid. So first you calculate the how much tax payable. How much tax payable. Out of the total tax payable, deduct the input tax. Deduct the input tax on CGST, deduct the input tax on SGST, remaining tax payable to the government. Now let's go to the problem, computation of value of supply and GST payable. So price of supply is 6 lakh rupees. Add following expenses. If it is excluding following expenses or excluding GST, we should add it. If it is including, don't add the incidental expenses. Directly we can go to a calculation of tax. So now add advertising, publicity, selling and distribution, loading and handling, service charges, outward freight. So what are the other things we should not consider? See, if they give any GST paid, IGST paid, CGST paid, we should not consider. Okay, any subsidy from the government, we should not consider. Any late fees paid, any fine paid, we should not consider. So apart from 3 items, and also any third person paid. So for example, any transportation charges paid to third party, so we should not consider. Apart from these 4 items, we should consider all the items. What are those? First one, any late fees, any fine, any other fine paid, we should not consider. CGST, SGST, IGST paid, any GST paid, we should not consider. Next point, subsidy from the government, central government, state government or local authority, we should not consider. Okay, apart from these 3 items, any items given as incidental expenses, we should consider those things, or we should add those things. Now if you add all the items, total value of supply is 7,80,000. On that, deduct the discount. So always while calculating the discount, take this amount. This is the actual cost of the product. On actual cost of the product, we should calculate the discount. 10% means here 60,000. 6 lakh into 10% equals to 60,000. Deduct the discount here. So deduct the discount, will get 7,20,000. This is the actual or total value of the supply. On the total value of the supply, we should calculate the GST. What is the rate of GST? GST is 18%. So total GST is 18% means, so it is intra-state supply. Intra-state means within the states. So already they have given the CGST, SGST means It is a intra-state supply. So since intra-state supply, 50% is the CGST. So out of 18%, 50% of 18% means what? 9%. So 9% is CGST, 9% is SGST. So out of 7,20,000, 9% is CGST, remaining 9% is SGST. Now okay, let's calculate. Now total value of supply is 7,80,000. Deduct the discount. Again, taxable value is 7,20,000. Again, now we have to calculate the GST. So out what is the total? 7,20,000 into 9%, or if you want to calculate total GST, you can calculate 18%. Later we can divide CGST 50%, SGST 15%, or we can directly calculate 9% CGST, 9% SGST. Okay, so 9% CGST is 64,800, remaining 9% SGST is 64,800. So again, electronic credit ledger showing 12,960, 14,340. So deduct this amount, 12,960, 14,340, remaining tax payable to the government. Now let's go to the one more problem. Compute the value of taxable supply of service provided by the hotel Regalis Mysore. So this is the when you supply the products. Here when you supply the services. So here what they are asking, they are just asking total tax payable, taxable supply. They are asking for the computation of total value of taxable supply. They are not asking for the calculation of tax. So what are the items you should take? So here provide the hotel Regalis Mysore in the month of November 2018. So selling price will not come here. So selling price is wrong. Okay, now room rent 12,000 per day for 12 days. So it is 12,000 into 12 days, and served alcoholic drinks for inmates of hotels. So any alcoholic drinks will not comes under GST. So petroleum products and alcoholic drinks will not comes under GST. It is a separate tax, we should not taxable. Next one, and also if the personal consumption, then also the GST or tax is not applicable. Next one, amount service for a car rented to guest 50,000, we can add this. Food charges is 8 lakh rupees, we can add this. Decoration of the conference hall rented. So how much it is? 30,000 per day. It is 5 days we have used the hall. So 30,000 into 5 days we can add this. Next point, laundry service charge we can add this. Spa and beauty parlor we can add this. Gymnasium we can add this. Wi-Fi charges we can add this. Club facility available for guests. So club comes under, it is a non-profit organization or non-trading concern. Any clubs comes under non-trading concerns. It is not taxable. Now let's calculate. So room rent is 12 days. It is 4,44,000. So it is a alcoholic drinks will not comes under tax under GST. Next one, car rent service we can add this. Provision of food we can add. Rent for conference hall we can add. Laundry service we can add. Spa we can add. Gymnasium we can add. Wi-Fi we can add. Here also the club facility will not comes under GST. It is not taxable because it is non-profit or non-trading concern. So next one, value of the total supply is 1 lakh. It is 12,52,000. On this we can calculate the GST at 18% if you want. Now registration under GST. So what is my registration? So we have to get registered to get the input tax credit, to get the ITC. See, we should get registered under GST. What are the procedure of GST? So why I should get registered? What are the advantages of registration? So these are the important questions they will ask in the exam. What are the advantages of registration? What are the procedure of registration? And what are the contents of GST registration form? These are the important questions they will ask. So registration is necessary under the indirect tax systems for the purpose of identifying the taxable person. So the authority, government or tax authority has to identify who is the registered person, and also they have to get all the information. On that information only, or how much raw materials he has used, or how much product he has used, or machinery he has purchased to produce that particular product, and also how much tax credit is available after the output is produced, after the finished product is done. So the government has to, or the tax authority will provide the input tax credit for the registered person on the basis of all the information provided by the registered person. So in order to get the input tax credit, we have to get registered under the Indirect Tax or GST Act. Next point, registration ensures tax compliance in the taxation ecosystem. So registration ensures a taxable, or it ensures a revenue for the government. So how much tax we can collect, they can plan on the basis of registered person, how many registered person is there. Person means business or organizations or individual. So person means not only human being, person means it may be institution, organizations or any other business or any other individual. So person, on the basis of the registered person only government can take some decisions. Next one, registered person or a person or a business entity under the GST law implies a unique identity number. So on the basis of registration, if you get registered, the authority will provide you a unique identity number. On the basis of that number only we can do all the transaction, and also on that it is like a bank account number. So whatever the transaction, how much you have deposited, how much you have withdrawn, like that all information you have, like that only how much input we have utilized to produce the product, and how much, what is the value of the output, how much input tax credit is available, those things will be available under the in this unique number. Next point, registration is significant for the taxable entity to avail the input tax credit for the tax paid on his purchase of inward supply. So purchase means, so what are the raw materials we have purchased, that is called as input. So on that already we have paid the tax. That tax can be deducted while calculation of output tax. So that is the input tax credit. Next point, GST Act always lays down the procedure for registration and related aspects. So GST Act gives the steps and procedures to get registered under the GST regime. So advantages of registration. So what are the advantages? First one, the supplier of goods or services will be legally recognized. So if we having any problems with the tax authority, or it may be any other problems or issues with the business, so you can directly sue that particular person or tax authority or the government if he got registered. So if he did not get registered, so he cannot file any case. So he cannot legally handle his problems. So legally resolve his problems. In order to legally solve our problem, we have to get registered under the GST regime. So proper accounting of tax paid on the input supplies which can be utilized for payment of GST due by the business. If we are registered under the GST regime, then whatever the input we have used, all the information will be with the tax authority. On the basis of that, tax authority will give the input tax credit. So we can deduct the input tax credit while calculation of the output tax. The registered person is legally authorized to collect the tax from his purchases and passes on to credit of the tax paid. So for example, when he paid the tax, when he purchased any products, he has to pay the tax, and he will collect that as a input tax credit, and he will transfer that particular product to the next stage of the business. There also he can deduct the tax, whatever the tax he has paid. Next point, only registered person become the liable under the GST law. So only registered person becomes liable under GST law. So any rules, regulations, or any other provisions, benefits given by the government or the tax authority can be taken by the registered person only. So if he is not registered person, he cannot get the benefits of the GST. So tax compliance improves. So government, so tax collection will improve if all the business get registered. So earning taxable entity can be easily traced and tax procedure can be initiated. If the registered person did not pay the tax, the government can send the information, what is the date of the tax, how much tax has to be paid. This information can be easily transferred from government to registered person. Next one, registration makes the dealers accountable and ensures the tax collection. So if for the business person, they are accountable for, once I get registered, every year or every month I have to file returns to the government. So on the basis of that, government can easily calculate the tax and also provide the input tax credit. Next one, persons liable for registration. What are the persons or liable for registration? First one, every supplier whose aggregate turnover in financial year exceeds 20 lakh rupees or 10 lakh rupees in a special category. Special category means northeastern states comes under special category. So if their business exceed 20 lakh rupees in the ordinary category, and if it is special category, if it exceeds 10 lakh rupees, that person is legally liable to get registered. Next one, special category states are Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh and Uttara vacant. So these states, if you are doing business in these states, so if your turnover exceeds 10 lakh rupees, then you have to get registered under the GST. Next point, registered person under the old tax regime. So automatically, if you are a registered person in the old previous indirect tax regime or indirect tax method, if you got registered, automatically after GST implemented by the parliament or by the government, so automatically you will get registered under the new tax regime also. Next point, transferee of business needs to separate registration. For example, so A and B is there. So A has purchased the business from B. So A has purchased the business from B. So A has to get registered under the GST Act. Next point. So if in case of amalgamation also and demerger also, we have to get registered. For let's assume, so A is amalgamating, A and B companies amalgamating, it will become new company called C again. So A and B's registration will get cancelled and we have to come up with Mr. C's, our company C's registration. Next point, so person exempt under registration. So who are the person need not to register under the GST? So person exclusively engaging in the supply which are not taxable under GST Act. So if the person who is supplying any agricultural products or any other products which is not taxable or with zero rated tax, that person need not to register. Next one, person exclusively engaging in the supply of wholly exempted goods or services or both. Again, so wholly exempted means, for example, export is wholly exempted. Even though exported, we have to register as a supplier. So in case we are dealing or we are transferring or we are supplying goods within our country, and if that particular goods are exempted from the GST regime, then need not to get registered. Next one, agriculturist. So if you are an agriculturist or a farmer, need not to register to sell his or to supply his products. Next point, specified category of person on the government recommendation notification, if that person is exempted to get registered, that person also need not to register on the GST. Next one, procedure for registration. For every person whose aggregate turnover exceeds 20 lakh rupees in ordinary states, 10 lakh rupees in the special category states has to get registered. Next one, application to be made within 30 days in every state or union territory in which such person is liable for registered. So once your transaction exceeds 20 lakh rupees, from that date you will be having 30 days time to get registered. So otherwise, on the basis of suo motu registration, if in case inquiry or if in case of any verification happens, so suo motu registration forms also will be sent by the tax authority. Next point, one registered per state, person having a multiple business. Now, so every person has to get registered as a separate registration should be there for every different state. If I am doing business in Karnataka and Tamil Nadu and Kerala, so I have to get registered separately in Karnataka, separate registration, Tamil Nadu separate registration and Kerala separate registration. And also if I am doing different types of business in same state, and also for every different type of business I should get registered. Even though in Karnataka only I am doing textile business, finance business or any other trading business, so I should get registered under for separate business, separate registration should be there. So if you are different state, so separate registration for different state. So every state should be registered as a separate registration. And also I am doing the different types of business in a same state, that also has to be different registration. So voluntary registration, all provisions of registration applicable. Next one, person having more than one registration, each such registration to be treated as a distinct person, means separate person. Next one, PAN mandatory for every registration. So on the basis of PAN number only registration will happen. So non-resident taxable person who is not having PAN, so he will be having separate registration or separate registration documents for calculation for registration. Next point, non-resident taxable person may be granted registration on the basis of such other documents. So the government or the tax authority may require or may receive any other documents to get registered that particular person. Unique identity card or unique identity number will be issued once you registered. So and also if a specialized agencies like UNO, United Nations organization and consultant or foreign embassy doing the business or supplying the products, they will be provided unique number to supply the products. And also registration certificate to be issued in a prescribed Form A, and also for every registered person a registration certificate will be issued for every registered person. Next one, registration certificate or unique identity number not granted within the prescribed period deemed to be granted. For within the prescribed period, if the registration certificate or unique identity number did not given from the tax authority, then it is assumed that that person got registered. Next, what are the documents required? This will be asked for 10 marks. Compulsory question will be having. First one, PAN number we need to, what are the documents needed for get registered? First one, PAN number, proof of business identity or incorporation certificate. Next one, identity and address of the business. Next point, photographs of the owner and also business. Next one, address proof of the principal's place. Principal means owner place. Who is the owner of the particular business, or the members or trustee who is running that particular business, chairman or the president or any other head of that particular business, his address has to be submitted. Next one, bank account details of that particular business. Next one, digital signature of the owner or head of that particular business. So here we'll end this session. These are very important topics we have discussed for the exam point of view. Again, we will see in the next session. Till then, thank you so much.